Hi, welcome to EQD Research Global Insights for Tuesday, June 8th. Today, all about day trading with index options. But first, before I get going, feel free to hit that like button as we go along. If you haven't subscribed, do subscribe. And I am always open to feedback, either in the area below or via email. And I do give my email address at the end of each of these videos. Now today, as I mentioned, day trading with index options. Well, there are several index options and a couple of ETFs as well that have Monday, Wednesday, Friday expirations. A big joke in the industry is, are daily options far behind? Well, I have a feeling that there are a group of traders that would love to see daily options. In fact, I'm one of those traders that would love to see daily options. I'm consistently seeing opening credit spreads in the first 30 minutes of trading days done in institutional size, 100, 200 lots, and so on. The benefit of these credit spreads is you do have a defined outcome on the close. You know at the end of the day whether you've made money or lost money on the trade. And because index options are cash settled, you don't have to worry about holding the options into expiration. Now, yesterday, on Monday, when we had Monday, June 7th, when we had an expiration, there were several trades in the NASDAQ 100 market with the underlying in the 13,735 range to about the 13,750 range. And all these trades were in the first 30 minutes or so. On the bearish side, there were two bearish and two bullish. On the bearish side, 160 lot. Somebody sold the 13,820 calls and bought the 13,840 calls. Took in a credit of $2, and then a few minutes later, 285 times, again using the 13,820 calls for the short, and then bought the 13,850 calls and took in a credit of $2.10. Now on the bullish side, selling out of the money puts, both of these trades were 100 lots. Somebody came in and sold the 13,650 puts, bought the 13,600 puts, took in a $1.80 credit on that one, and then using a slightly higher strike price, but also being a 50-point wide spread, somebody sold the 13,675 puts and bought the 13,625 puts, and ended up with a credit of $5.05 on that trade. The close for the day yesterday, just under 13,803. I was watching all of these trades very closely, watching the bearish ones a little bit more closely, since the NASDAQ 100 was working its way higher and came within 20 points or so of that short strike. We did close at 13,803, but I was keeping a close eye to see if there was any managing trade as that short strike was being approached late in the day. I think it just did not get, the NASDAQ 100 did not get close enough to for any concerns with respect to the short leg on that trade. Well, I definitely didn't see an exit trade on that trade, on either of those trades. And then finally, just a little bit of self-promotion here. This coming Thursday at noon Eastern time, I'm going to do an IB webcast for interactive brokers. I'm going to cover the same topic that I just talked about, but I am going to take a look at trades using the NASDAQ 100, as I just did, but also the S&P 500, Russell 2000, and the QQQ ETF. I'm going to throw an ETF one in there as well. Just about all of these trades were done early in the day. The ones I'm going to talk about later this week. There was actually one that was done very close to the close that caught my eye, and it's not a credit spread, but I'll leave it to Thursday to discuss that. The sign-up information is in the comment section below. There's a link. Please feel free to sign up for it. Even if you can't make it, sign up for it. It will be recorded, and then you'll get information about the recording as well. So with that, thanks for joining me for EQD Research Global Insights for June 8th. Again, any suggestions you have, use the comment section below or send me an email. If you stuck with me this long, you have to hit the like button. That's the rule. And if you've got more in-depth questions or comments, feel free to use my email address. It's rhodes@eqderivatives.com.